Hey guys, so today I want to tackle a question I've been getting from a lot of people, and that is when is the right time to invest in silver or gold? Um, so I just quickly want to take you guys through how I do it, and I also wanted to show you a trade that I did using this method that helped me profit 187,000 Rand, which was quite nice. Let me show you that investment. So the investment that I did. Was probably around it was around I got into silver around November 2019. So I started investing around this period, and I went through the system I'm about to show you. I had all the ticks in the boxes of buy signals. So I dollar cost averaged in over a period of a few months. Obviously, we had the big COVID dip day. I didn't actually get in there, but I put in some more money when it bounced around back up here. And as you can see, everything just skyrocketed. Silver took off. I just thought the market was overheated, and I sold out around here, which gave me a good 2x. I invested 167,000, and net gain was 187,000. So I'm going to show you the system that I used step by step and how you can implement it into your investment strategy. If you guys haven't done already, please can you hit the subscribe and like button below. I'm going to try to release a lot more material about investing and also about how to make money online in general, predominantly in South Africa. Also, just a disclaimer, I'm not at all recommending you guys try any of this. I'm just showing you how I successfully made money online. And please don't invest any money that you can't afford to lose. I appreciate that. Okay, so let's get started. So back to the core question. So when is the right time to invest in silver and gold? So before I even get started, touch silver and gold, the first thing I like to do is answer that question. And so obviously to answer that question, you need to compare the overall stock market compared to commodities, which obviously commodities is silver and gold and platinum and stuff like that. So that is the very, very first step that I did. So this is a blog post I wrote about it. You guys can check this out later. Just go to financebriefly.com and search Krugerrands and you can see the full blog post. It's actually about Krugerrands, but it's the same principle behind it because Krugerrands you buy for the commodity value. So as I mentioned, the very, very first thing I do is I see, okay, what is more undervalued, the stock market or commodities? And to do that, I compare the macro trend between the Dow Jones index, which gives you a good average of what the general stock market is doing. And then I check the trend between the Dow Jones macro trend and the silver index, which I've linked out here. Okay, cool. So you'll see this image here. So this gives you an overall macro trend between, as I mentioned, between the Dow Jones and silver. So why do I choose silver and not gold? You can use one or the other, but I just like to stick to one commodity asset class so that I have consistency in my data. For me, I like to use the silver because I've defined my metrics. Okay, so as you can see here, there's two scenarios that comes out of this. Commodities are either overvalued or the stock market is either overvalued. So that's kind of what I'm trying to gauge over here. So based on historical data, so there's two scenarios that come out: scenario A and scenario B, as I wrote in this blog post. So kind of what I've defined, and also through a lot of educational material I've been through and podcasts. If the ratio trend line is over 1,000, then this indicates to me that the stock market is overbought, which means that's probably not an investment that I want to make. So I want to stay away from the stock market. So if you want to look at today's trend line, so remember above 1,000, that means the stock market is overbought. So let's take a look at today. So as of today, it's sitting at 1,317. So that's a signal to me right there that, okay, take a step back. Let's not put our money into the stock market. Let's look at other asset class to see where we can invest our money for a better return. And I think we can kind of feel this. The general consensus is that the stock market has been moving up for a very long time. So a good rule of thumb is an asset class is pretty hyped up and it's been going up for a long time, and you can feel a lot of hype around it. That's generally the one you want to stay away from. Generally, you want to look towards asset classes that not many people are talking about. So this will be a perfect signal to me that, okay, stay away from the stock market, which I have been for a very long time, probably for about 5 years. Okay, let's look at scenario B. So if the trend line is below 600, then this indicates to me that the stock market is undervalued. Okay, so that obviously back in 2000 and whatever that is, the B scenario on this image, if we had something looking like that, that would have indicated to me that, okay, let's rather take a look at the stock market to invest in rather than commodities. But so going through this exercise, we can clearly see that. So I wrote this back in August 2020, and back then I concluded that commodity stock market is overbought, which means I will turn my focus onto commodities, and we can conclude the same thing. So trend line over 1,000. Again, yeah, stock market is overbought, so let's take a look into commodities. Okay, so that's the very, very first thing I defined. Okay, so as I mentioned, you have first define if precious metals are undervalued compared to the stock market. So now that we've defined that, we can have that tick in the box. Okay, let's look at gold and silver, which are the two that I like to keep an eye on. Again, you can look at any commodities. You can do this with any commodities, but I find that the less you focus on, the better decisions you can make. Otherwise, it just turns into a mess. So for me, it's always silver and gold. Okay, so now that we know we're looking into commodities to invest, let's find out which precious metal is undervalued the most. So obviously, we're looking at silver and gold here. So we're going to do a very, very similar thing where we look at the historical ratio between gold and silver. Okay, so as I mentioned there, historically it's swung between 40 and 75. And obviously, as mentioned before, each swing indicates a different scenario as shown in the image below. Okay, so as you see, B scenario is 40, A scenario is 75. So we're going to speak through those two scenarios now. Let's quickly open up this historical ratio. So we're sitting at around 75 now. The two scenarios. So our A scenario is if the ratio is above 75, then this indicates to me that silver is undervalued. Okay, well, taking a look at this figure today, it's sitting around 75. So that's already telling me, okay, between the two asset classes, you probably want to look at buying silver. Okay, then obviously B scenario, if the ratio line is below 40, then this tells me that the gold is undervalued when compared to silver. So if this was below 40, I would have put my money into gold, but it's not. It's above 75. Well, it's around 75. So if I had to invest today, on date 13 September 2021, I would put my money into silver. And yeah, it's as simple as that. It's a nice guideline. It gives very, very simple rules for you to follow. So here's a caveat. So what if you already own silver and gold, or even if you own a stock, some stocks and stuff, like how do you kind of swing trade those? So this does get a bit more complex, but so if you think about it logically, let's say you own Tesla stocks, and the market looks overbought. You do that little exercise as I mentioned in the beginning, and the market looks overbought. So what I would do at that point, and also depends on many variables, but what I would do is I would swing trade, or at least take some profits from the Tesla stock, and swing trade that into commodities, because obviously the stock market is looking high. commodities looking low. So all I do is swing trade some of those stock market profits into the commodities, and then I go through the same logic can be applied between gold and silver. Obviously, if the ratio of the gold to silver is high, above 75, and you own a ton of gold, then it's probably a good idea to start taking some profits from your gold and swing trading it into silver, because silver is a lot more undervalued than gold. So you see how you can kind of use these same principles and kind of swing trade your portfolio, or just shift around budget, depending on what's overvalued and what's undervalued. So it's all down to that. These basic rules is just to help to give you an idea of what's overvalued and what's undervalued, just to increase your probabilities of making a successful investment decisions. So that's the tool. Hope you guys like it. It's been extremely useful and profitable to me. So last question, you're probably wondering, okay, so what if it's not above 70 or below 40? This would signal to me that you just got to sit on your money and wait for a better decision. I always like to invest in stocks and commodities at extreme levels. Obviously not the upper extreme level, but the lower extreme level. You never want to kind of buy in the middle, because this is a very, very long-term investment strategy. Take you a long time to make a decent profit out of that. So just rather sit on your money, wait for a stock market crash or another recession, or even wait for the commodities to pull back, and then every few months or so just go through the same exercise and see if there's any buying or selling opportunities. And as I mentioned, this is a very, very slow process. This is not a day trading strategy. It is a long-term strategy, but there's been studies done that an investor that makes 10% return per annum consistently over a lot of years is like doing 99% better than everyone else. So yeah, if you just make the right decisions, and if you can beat that by making less decisions, it's easier for you, and you'll win in the long term. It definitely is a patient game. So I'm going to link this in the bottom. I talk a lot about Kruger rounds. Don't get confused. When you see Kruger rounds, just think commodities. All I'm saying here is, you buy Kruger rounds for its metal value. So that's why I mentioned Kruger rounds here. So I'll leave the article link at the bottom. Just look for the subheading, when is the right time to invest in Kruger rounds, and you can work through that exercise on your own. If you guys have any questions about this process, please make sure you hit me up in the comments. I can definitely help you guys out. Also, if you're just into making money online in general, highly recommend you guys check out my website, financebriefly.com. I've got e-commerce blogs, blogging blogs, pretty much any way you can make money in South Africa, based on my personal experience. Just definitely check it out. And I'm going to start releasing a lot more tutorial videos like this in the future, heavily around how to make money online in South Africa, and obviously internationally as well. So let me know what you guys think in the comments, and just don't forget to like and subscribe. Thanks a lot, guys.